You look at all of the homes that are surrounding where I am now, they're $1 million plus. And the reality is that the majority of my peers aren't earning nearly enough in order to have homeownership, let alone start a family. So that's a huge problem with younger people, but also with older people too. Ultimately, what's happening in the housing market right now and the global real estate market more broadly in the US, there's $35 trillion worth of home equity that's just sitting there. Most of it isn't being used for anything. The existing tools to actually do anything with that money are slim to none, right? If you want to do a HELOC, enjoy a 7 or 8% rate or 9% rate, particularly going to a bank and saying, I'd like to take out this home equity line to buy some Bitcoin, good luck getting a good rate. And there are reverse mortgages, but those are extremely predatory, right? Particularly for old people. And so then it becomes a question of like, what on earth can we do in order to siphon all this capital away from real estate and into Bitcoin? And globally, it's a $370 trillion market. So if you want to throw up the total global asset value chart I have right here, this is from Jesse Myers. Everyone has seen some variation of this, but basically this is total global asset value broken up market to market. You can see money itself is $120 trillion in size. Equities are $115 trillion. You've got bonds at $300 trillion, but real estate is the single biggest global asset market. At $330 trillion. Actually, the number is $370 trillion in size. Now, this chart was as of 2023, $40 trillion in global real estate value has been added over the last 2 years. So it's a huge market. And, in the equity market, you have Bitcoin treasury companies, so people can directly invest in Bitcoin that way. They can siphon away some of the monetary premium in equities by having the companies they're buying invest in Bitcoin. So they're buying a Bitcoin proxy. With bonds, the exact same thing is happening. There's capital being siphoned away from bonds and into Bitcoin through things like MicroStrategy's preferred stock. But as far as real estate goes, and so those two markets, right, equities and bonds, there are already vehicles, there are already pumps that are siphoning away the monetary premium in those markets and into Bitcoin, but there is not one for real estate yet, at least not a major one. There are some things in the works. I mean, we obviously just got the Fannie and Freddie news. That Bitcoin will be counted as an asset when qualifying for a mortgage. But frankly, massive news. But ultimately, we know the government moves at a snail's pace. And what that really means for the homeowner, it's a huge development. They don't have to sell their Bitcoin. But your home being your biggest asset, you can't use your home in a very efficient way to get more Bitcoin, at least not without paying monthly payments or taking on interest at some stage over the life of a loan. And so basically what we're trying to do is build a direct bridge between the $330 trillion global real estate market, starting with the $35 trillion US home equity market, into Bitcoin. So that massive burgundy square or salmon-ish square, or like a Mars red square you see at the bottom left of the screen, that $370 trillion real estate market can get pumped into Bitcoin. And so ultimately, the reason, I'm doing what I'm doing is I want to make it so that homes are affordable again, and Bitcoin turns into a $300 trillion plus asset in the process. And so that's the problem, right? The problem is that people's homes are their biggest assets, but oftentimes they're not the best performing ones out there. And oftentimes, selling your home doesn't leave you nearly enough for retirement.
This episode of the Bitcoin Economy is brought to you in part by Ledden.
Need cash but don't want to sell your Bitcoin? Ledden is the global leader in Bitcoin-backed loans, issuing over 9 billion loans since 2018. And they were the first to offer proof of reserves.
With Ledden, you get custody loans, no credit checks, no monthly payments, and more. Visit ledn.io for more information.
Welcome back to the Bitcoin Economy. We have Joe Consorti, head of growth at Horizon, and also Thea. Joe, welcome to the show.
Jody, thanks so much for having me.
Yeah. So as a real estate major, it's been a business I've been working in a long time. Decided to get into Bitcoin instead. So, fell away from the family tree. But Joe, my friend now, we just recently met, is bringing me back into real estate and combining it with Bitcoin. So excited to jump into this alchemy today. We're unpacking, obviously, all Bitcoin financial services, help educate everyone on, the different risks involved, the different things they should be thinking about when they put their Bitcoin to work, and just making smarter decisions. I think there needs to be better information out there. So Joe, want to quickly get your orange pill story. What got you into Bitcoin, what you've been working on in the space. But then let's get into Horizon and all the things that you're looking at on bringing real estate liquidity into Bitcoin.
For sure. Yeah. So super high level. My Bitcoin story was I was going to college. I was a freshman in 2019. And then during spring break, they kicked us all out because of COVID. They didn't let us come back. I had packed an overnight bag for spring break, obviously, because it's spring break. And they didn't let us come back to school. And so that was kind of the first straw, if you will, that kind of made me think, wow, these people kind of really don't care about anyone. And that's just, higher authority in general, right? These people who kind of wield it, that we've given power to. And it kind of brought me down the rabbit hole. I had a few classmates, namely Dylan LeClaire and my friend Tyler LaRoche, Metaplanet and BTC Inc. now respectively. And both of them were pretty heavily in Bitcoin. And then Tyler ended up orange pilling me toward the end of that year. I had run a general contracting company, didn't know how to do any of it, but I learned as I went. Over that summer, they had sent us home for spring break, and then there was like a 3-week pause in classes. Then they did them over Zoom. So I just took that time to go out and make a bunch of money with my friends. Over that time, I was also in the Bloomberg terminal, studying markets, how everything fit. Bitcoin caught my eye, and I had a lot of capital to deploy at the end of that summer, so I did. I saw what Bitcoin did, and shout out to Danny Knowles. That's the name of his podcast. And then it all fell into place from there. It's the philosophical element from earlier in the year. I had read some materials, The Bullish Case for Bitcoin and Masters and Slaves of Money, and then pair that with Bitcoin's price action. It got me extremely interested. And now it's the asset that I spend all day evangelizing to as many people as will listen.
Yeah. You always hustle on the Twitter timeline. I see that there's always fresh content, but it takes time. It also takes conviction, to put your name next to something. Mm-hmm. So let's talk about what is the problem statement? Like where, if you knew, someone like Dylan LeClaire that has joined Metaplanet, strategic Bitcoin advisor, has shaped how they're doing their strategy different from Michael Saylor. So very influential guy that was doing research before. I think it BTC Inc. or Bitcoin Magazine. What are you working on, and what has piqued your interest?
For sure. So the problem is a pretty big one. I am 24 now, and the prospect of homeownership without Bitcoin, particularly in my area, in the New England area, is slim to none, frankly. You look at all of the homes that are surrounding where I am now, they're $1 million plus. And the reality is that the majority of my peers aren't earning nearly enough in order to have homeownership, let alone start a family. So that's a huge problem with younger people, but also with older people too. Ultimately, what's happening in the housing market right now and the global real estate market more broadly, in the US, there's $35 trillion worth of home equity that's just sitting there. Most of it isn't being used for anything. The existing tools to actually do anything with that money are slim to none, right? If you want to do a HELOC, enjoy a 7 or 8% rate or 9% rate, particularly going to a bank and saying, I'd like to take out this home equity line to buy some Bitcoin, good luck getting a good rate. And there are reverse mortgages, but those are extremely predatory, right? Particularly for old people. And so then it becomes a question of what on earth can we do in order to siphon all this capital away from real estate and into Bitcoin? And globally, it's a $370 trillion market. So if you want to throw up the total global asset value chart I have right here, this is from Jesse Myers. Everyone has seen some variation of this, but basically this is total global asset value broken up market to market. You can see money itself is $120 trillion in size. Equities are $115 trillion. You've got bonds at $300 trillion, but real estate is the single biggest global asset market. At $330 trillion. Actually, the number is $370 trillion in size. Now, this chart was as of 2023, $40 trillion in global real estate value has been added over the last 2 years. So it's a huge market. And, in the equity market, you have Bitcoin treasury companies, so people can directly invest in Bitcoin that way. They can siphon away some of the monetary premium in equities by having the companies they're buying invest in Bitcoin. So they're buying a Bitcoin proxy. With bonds, the exact same thing is happening. There's capital being siphoned away from bonds and into Bitcoin through things like MicroStrategy's preferred stock. But as far as real estate goes, and so those two markets, right, equities and bonds, there are already vehicles, there are already pumps that are siphoning away the monetary premium in those markets and into Bitcoin, but there is not one for real estate yet, at least not a major one. There are some things in the works. I mean, we obviously just got the Fannie and Freddie news. That Bitcoin will be counted as an asset when qualifying for a mortgage. But frankly, massive news. But ultimately, we know the government moves at a snail's pace. And what that really means for the homeowner, it's a huge development. They don't have to sell their Bitcoin, but your home being your biggest asset, you can't use your home in a very efficient way to get more Bitcoin, at least not without paying monthly payments or taking on interest at some stage over the life of a loan. And so basically what we're trying to do is build a direct bridge between the $330 trillion global real estate market, starting with the $35 trillion US home equity market, into Bitcoin. So that massive burgundy square or salmon-ish square, or like a Mars red square you see at the bottom left of the screen, that $370 trillion real estate market can get pumped into Bitcoin. And so ultimately, the reason, I'm doing what I'm doing is I want to make it so that homes are affordable again and Bitcoin turns into a $300 trillion plus asset in the process. And so that's a problem, right? The problem is that people's homes are their biggest assets, but oftentimes they're not the best performing ones out there. And oftentimes, selling your home doesn't leave you nearly enough for retirement. Most people, particularly at the rates now, if you just got into a 30-year mortgage, given the average pay in the United States, you're living paycheck to paycheck on your house. And that's just not sustainable. It doesn't give you any money for retirement. You're putting all this money into your house, but it's underperforming the S&P 500 and things like Bitcoin. So what can you do? With Horizon, basically the idea is we are building that bridge. That is the massive vision of Horizon. Bitcoin treasury companies are doing it with equities, Strategy and others are doing it with bonds, and we are doing it with real estate, starting in the US residential market.
So with this market, obviously massive opportunity. We've gone through and we've seen, that $300 trillion bonds or fixed income market that Michael Saylor has, decided to go after with, Stride and Strife, these different products that, he's looking for the credit agencies to rate those as investment grade vehicles and siphon in some of that capital, right? So that's been something not necessarily intuitive to everyone. You need to learn a little bit about finance and how the market structure works, and then how mandates work, where certain investment firms and institutions have to, invest in some, corporate bonds, invest in some kind of fixed income vehicle. So for you guys, you're looking at something that some people are familiar with is on HELOCs, right? You're paying into this mortgage, you're building equity in your home, but you can get a home equity line of credit, and people think of that as adding an addition or just getting some capital available, maybe send a kid to college. What are some of the things that you encountered immediately where, like you said, if you try to get a good rate on a HELOC because you say you're buying Bitcoin, they're going to give you a horrible rate? What are, is that the worst thing? Is just when you put down, and if you're honest about it, what you're using that cash for, it's not going to be good financial terms for you.
Correct. And also for many people, it's just a function of lifestyle change. If you take on a HELOC for something like buying Bitcoin, let's say you draw your entire balance down that you have on the HELOC right away. Yeah. In that case, you're going to have some pretty hefty monthly payments in addition to the monthly payments you're likely already paying on your mortgage. And so it's for people who don't want to disrupt their lifestyle, it's not very efficient. When you buy Bitcoin using your excess capital in your bank account from your earnings, it's not a lifestyle change because it's excess capital. It's not doing anything for you in your bank account, right? It's money that you've set aside that you're not using to pay bills. It doesn't disrupt your lifestyle. And so using the capital you've put into your home to buy Bitcoin shouldn't be a disruption to your lifestyle either. And with a HELOC it is, right? Because you're taking on those additional monthly payments. And even for other products, right? Even for if you were to do a deferred interest loan product, right? You're still paying all that interest at the very end. And so you're still a victim. I won't say a victim because that's perhaps too forward, but you're still having to pay all of that interest at the very end. So it's really a function of lifestyle change. How can you efficiently take the money you've got in your home and deploy it into Bitcoin in the same way that you could just go to your bank account, hook it up to an exchange like River, and buy Bitcoin. And that was basically the main problem being solved for. It's twofold. Real estate is a huge market. It's people's largest asset, but oftentimes not their best performing one. How can we siphon that into Bitcoin, and how can we do it efficiently without making causing disruption to people's lifestyles, without having to add that monthly payment or that huge interest burden on people? And that's kind of what we've solved for.
Yeah, so let's dive straight into that. And I think understanding and walking through love visuals on how Horizon works. So Tell us a little bit about how it's structured.
For sure. So this is an illustrative example on a home that's $1 million today, and you want to take out $100,000 of your net equity and buy Bitcoin with it. And then in 15 years' time, those are what the numbers look like. So I'll break that all down. But essentially, the way that Horizon works, we operate currently on a home equity investment structure. So essentially, a home equity investor purchases a share of the home's future value today. That share steadily grows to 2.25x the original value that you drew out, and no more than 2.25x. And then it stays there for the entire duration of the term. So this product, it's extremely interesting because it's an equity-based investment vehicle for homeowners. It's not a debt-based one, right? And so during the transaction, essentially this provider share grows to a maximum of 2.25x the amount you originally drew out, right? So $1 million home, they take out $100,000 in order to buy Bitcoin. And then in exchange, the provider has a 10% stake in the future value of the home. That grows in this situation to 22.5% by about year 8. And then it stays there, right? It stays there for the remainder of the term, right? There are no term limits. So it could be anywhere from 10 years to 50 years to even 70 years, right? If you put your kid on the title, theoretically, you could go extremely long with Horizon. And because the provider share is capped, essentially your cost, if you kind of annualize the final amount you're paying into an APR, it's much lower over time at some stage than any other financing option in the market, or I'll say any financing option in the market, because this isn't a financing option, it's an equity-based investment tool. And so essentially, the numbers break down like this, right? You're getting $100,000 in cash to buy Bitcoin today in exchange for a 10% share in the home's future value. That grows to, by year 15 in this case, 22.5%. And the only payoff at the end of the term is that share. That's it, right? And then all of the Bitcoin, all of the cash that you are given to go and buy Bitcoin, that's fully yours, right? So the Bitcoin is not held as collateral. Horizon does not take upside on the Bitcoin whatsoever. It's essentially a very clean transaction. You can think of it almost like a swap. You are swapping a portion of your home equity into Bitcoin, and then at some later date, that portion grows to 2.25x at a maximum what it originally was, and that is the final payoff. And you could let this thing ride and ride and ride and ride until you sell or do a title transfer or refi, right? And so the benefit of this is that over time, you're going to have a lower overall cost than other options of the market. And more importantly, there are no lifestyle disruptions, right? And the other thing that is, that kind of falls under the radar is the idea of no term limits, right? So with Bitcoin, we frankly never know when it's going to do what it does, right? I remember in 2022, everyone thought Bitcoin is going to be $100,000. By conference day, it was like 40 or something like that, or 70, something not even close to 100K. We never know when Bitcoin is going to do what it's going to do. So let's say you are in another vehicle and you decide to use it. It has a 10-year term limit. They're taking Bitcoin upside. All of a sudden in year 9, Bitcoin craters, and it craters by 50% compared to where it was the prior year. When the contract's up, you have to pay. And you have to pay the home upside and the Bitcoin upside. All of a sudden, you haven't made a lot of money, right? You haven't made a lot of money in the deal. It's a pretty raw deal. And so the flexibility that Horizon allows for by having no term limits is to make it so that you can ride out those Bitcoin crashes, which it tends to do. They're unpredictable and they can be big. And it also gives you the flexibility to end it at any time, right? So you could end it at year 3, you could end it at year 30, you could end it at year 15. And so whether this is a short-term thing for you, whether it's an intermediate term thing for you, you're halfway through the life of your mortgage, or whether you're in your forever home, all paid for in cash, and you're going to stay there for 30 years, Horizon gives you that flexibility while also making sure that you're not forced to close out this contract when Bitcoin's price, does something crazy, and then all of a sudden you're left underwater.
Yes, it's fascinating. So does I guess with Horizon, do you evaluate markets differently? Like if someone, say, in Florida has a home and, hurricanes increasingly get worse and it's really hard to get insurance. And so, home prices start to come down, or like, let's say in Texas, if they've overbuilt, or, any of these market differences, does that affect how Horizon would come in and evaluate that investment?
Right. So for us, no. We work with a preferred partner named Cornerstone Financing, and none of those factors would come into play. Obviously, the condition of the property itself, but region to region, whether the market is heading up or heading down, that doesn't affect the appraisal. Ultimately, a third-party appraiser comes in and determines that value. The markets that we serve are listed on our website. And so essentially on net, the company is financially long real estate, but we are a Bitcoin company to the benefit of the end user, right? Because we're taking no Bitcoin upside, which is a huge differentiator from a lot of these other products, in addition to everything that I already mentioned that differentiates us, it makes it so that, ultimately it's better for the end user because they get to retain their Bitcoin stack if they like to. They could choose to pay however they want. But to answer your question, no, that wouldn't be impactful. The states that we operate in are listed on our website, and we're doing our best to expand to as many eligible states as we can. In some states, there are no HEI. There are no HEIs, right? And so, down the line, who's to say we won't come up with some other kind of model to serve those states? But for the time being, there are a handful of states that we want ever to be able to operate in.
Yeah. What are some of the common people coming your way? Is it people that are retired, have a lot of home equity, and it's almost like their entire retirement is banking on a singular real estate market, which I think most people don't realize that, would you want your stock portfolio to all be in a single thing? And, housing, as we see long-term, just inflation, housing could go well, but you also see there could be a drastic, cause in certain markets or, certain tax regimes that are going to come in. A lot of unpredictability that I don't think the housing market's going to be necessarily benefit from in the same way it did in 2020. No. We printed money. So what are the driving people to Horizon, to your contact us page?
Yeah, I think it's the value proposition. It's the value proposition of being able to transform home equity that's appreciating. If you take the Case-Shiller 3% a year and put it into Bitcoin, which, its 4-year CAGR right now is 28%. So that's, a pretty nice deal, frankly. And so it's primarily people who are into Bitcoin already, people who are already sold in the idea of Bitcoin. And then as far as demographics go, we do have a lot of equity-rich older people, right? Kind of 45 and up. But I won't say that's the only market we serve, which is kind of interesting. You'd think with a product like this, right, you need to have a decent amount of equity that's built up in order to potentially pursue this. But I've had a few calls today where it's younger homeowners who have, at the longest, 26 years left on their mortgage, and they're doing Horizon. And so it varies wildly, and that tells me that, okay, we're not just serving the market who this is best for, we're serving homeowners who are still pretty young. Right. And they just want to get Bitcoin today. It doesn't matter how much of it they can get. They just want to be able to acquire it rather than having that sit in their house. Because, it kind of goes two ways. I had mentioned that my peers, probably not many of them make enough money in order to be able to put a down payment on $1 million plus home, and so they buy Bitcoin instead. But those that did put a down payment on their home, right, sometimes they look back in regret, and they say, wow, I wish I could have put that into Bitcoin instead. And now, right, if your LTV qualifies, you can kind of walk back that decision while staying in your home, while not refinancing, while not taking out new debt, and put some of that into Bitcoin so it can go to work for you. And so it's really a powerful value proposition. It's a simple and powerful value proposition for the homeowner, which is you could transform dormant home equity into Bitcoin with no monthly payments, no term limits, and it's highly flexible. And there's no Bitcoin upside. And then as a company writ large, our vision of kind of siphoning this extremely bloated market, siphoning all that monetary premium where it shouldn't be into Bitcoin is also powerful, right? Because it gives, it's frankly, the dream is to make it so homes are affordable and Bitcoin is a $300 trillion asset. That is ultimately the dream. And that's what we're trying to, I won't say that's what we're trying to do, but that's ultimately, at least my guiding vision, my guiding principle. Is that homes should be homes and stores of value should store value. And your house shouldn't be your retirement account. Bitcoin should be, right? And so that's ultimately kind of the value prop and what I'm all about, at least personally, and what's driving people to Horizon.
Yeah. So what are the risks? What should people know? If you're getting Bitcoin back and you're able to move it to self-custody, you're in control of it.
Mm-hmm.
And if, Cornerstone Financial goes under, then, they no longer, maybe there's a bankruptcy and the bankruptcy court, has that ownership percentage that they'd own. But is there anything that you're encountering that you need to educate people on the risk side?
Absolutely. So there are risks, right? Like anything else, the risk that you just mentioned, right? Our financing partner goes under. there are many other preferred partners of ours out there who'd be able to take that on, right? Take on that obligation. In some cases, like in bankruptcy court, these things immediately come due and the contracts are exercised. But in all likelihood, I won't say in all likelihood, but there's also a chance that the contract isn't exercised, right? And the full amount does not come due. It's all very dependent on, ultimately who ends up buying, that distressed company, right? That is a risk. And I don't want to say that because, this company isn't distressed, right? They're in good condition, but even still, that is a risk, an edge case risk. The other risk, the primary risk for the homeowner is that Bitcoin doesn't do well. The primary risk for the homeowner is that because Bitcoin is ostensibly what they're buying, right? They can buy whatever they like with the cash that they're given. But if Bitcoin is what they're buying and Bitcoin goes to zero, that's a risk, right? Or even if Bitcoin stays flat for the duration of their term, right? Let's say, Bitcoin stays at $105,000 until, 5 years from now, 10 years from now, 15 years from now. That would be a risk to the homeowner, right? If the homeowner used the cash that they were given to buy Bitcoin and it stays flat for 10, 15 years, that would be a risk because then ultimately the contract would need to be paid off somehow, some way. And the Bitcoin proceeds probably would not be able to cover all of it. So that is a risk. Those are the two big risks, right? If our main partner goes under, which in that case, the contracts would likely be bought by somebody else and they wouldn't immediately become due. Or Bitcoin does terribly. And so the primary risk for people is that Bitcoin does terribly, right? Let's put that edge case scenario aside. The primary risk is that Bitcoin does terribly. But ultimately, the people who are coming to us have very firm convictions in Bitcoin, as do I, right? Mm-hmm. We understand what's going on in the country. The debt ceiling was just raised by another $7 trillion to $45 trillion in total. And so ultimately, you got to find buyers for that. And when you can't find buyers for that, you print money. And so really a lot of people see the end game and, more and more, even with just this news that we just saw, Bitcoin is seeming more like an inevitability as the days go by, right? And every single day that Bitcoin does not go to zero, it is one day closer to fully fulfilling what its monetary properties allow for, which is it to be the apex store of value, the world's single largest asset. And so ultimately, the people who are coming to us have firm convictions in Bitcoin. And so that being the primary risk associated with this contract, most people are still comfortable stomaching that, right? Because that's a risk that they hold anyway, right? The people coming to Horizon, chances are they already have a great deal of savings in Bitcoin. And so, if Bitcoin were to crater and go to zero, probably something much bigger happened in the world that caused that to happen that you should be more concerned about. But that is the primary risk with Horizon. If Bitcoin is what you're buying with the cash,
Yeah, so really encouraging people to look at you need to be able to look at time horizon that's longer than a cycle, single 4-year cycle. So 4 years, 8 years, at the minimum, for an investment like this, because there are definitely going to be dips. There always is. And so I think it's fascinating. We enjoy, diving into these things and we want to keep talking about this. As we wrap up, Joe, what's the most fascinating thing you're excited about now? Is it particular treasury companies, that's been in, all over the news? Is it, are you more on the technical side of the OpCat return? Hey, I want to decide what core developers, I'm going to support. What is, Joe's outside of, bringing on real estate liquidity? What's your, Roman Empire?
For sure. The biggest thing that I'm really excited about is what's going to happen with Bitcoin treasury companies. So the reason I say this is because many people are saying that Bitcoin treasury companies are the altcoins of this cycle, but I think that's a misunderstanding. I think it's a false equivalency for this reason. So altcoins, they have no underlying value proposition. The assets they're holding are worthless, but the market has marked them up to a tremendous degree, right? And then inevitably they created a zero, right? They're a foundation built on nothing. Essentially, they're pump and dump schemes, right? There's no underlying. Basically, the way to think about, and so people will liken Bitcoin treasury companies to that because they see, Bitcoin treasury companies are a trend and they have tickers that are trading in public markets that are doing well. Therefore, it's just like 2017. I wouldn't say that, right? In my mind, that's a false equivalency because Bitcoin treasury companies are just a new structural cohort that's buying Bitcoin. That's it, right? There may be exuberance in public markets toward that for now, and that may very well continue. A lot of people may prefer to buy these companies who are purchasing Bitcoin on leverage and holding it on their behalf rather than buying and holding Bitcoin themselves. It's simply a new way for individuals to acquire Bitcoin. But ultimately, it's just companies who are buying Bitcoin, right? In the same way that you and I can buy Bitcoin, companies have every right to do it as well. And so I would say that rather than calling it, the altcoins of this cycle, I would say that they're a new structural buyer of BTC, which is good, right? Just as these ETFs provided an on-ramp for people to, invest in Bitcoin, so too do these Bitcoin treasury companies, right? If an institution who has mandates and they cannot purchase Bitcoin, they could buy an ETF or they could get leveraged Bitcoin exposure through any number of these Bitcoin treasury companies. And so for me, the most exciting thing going on now, apart from the technical side, Amboss just launched a really cool tool called Rails, where you can get native Bitcoin yield on the Lightning Network with no liquidation risk. It's extremely cool. That's what I'm excited for on the technical side. But more so in the broader sense, I'm just excited to see, how far and how long Bitcoin treasury companies continue to have this sort of mania, because I think it is a lasting thing. I don't think this is a fad. I don't think it's going away. Just like every form of exuberance, it does oscillate around a trend line. So there is a chance that it comes down in popularity, but they're never going away. They are just a new structural buyer of Bitcoin, just as individuals are, just as these institutions are with ETFs and treasury companies, and just as banks will be one day once they can start allowing their clients to collateralize loans with Bitcoin. So that's what I'm the most excited about: the continued integration of Bitcoin and corporate finance and Bitcoin and global finance more broadly.
Yeah, we never want to encourage people to necessarily take on certain financial products. We want to educate them on it, and then it's inevitable. People are gonna lend against their Bitcoin holdings, and I think access capital in the way that you guys are offering, and it's good to start testing these out and then educating. Hey, this is the certain financial product that's tied to Bitcoin that's good for you. What we're looking at too with Bitcoin treasury companies, I do think there needs to be more nuance in the discussion, because they are backed by Bitcoin. They're very clear and transparent about what they're buying. They need to continue to show, hey, here's either proof of reserves or continue to be audited, to show, hey, we're actually holding the Bitcoin that we say we're going to do. And I think one thing is around political risk, right? Of yesterday you mentioned New England, Connecticut, I think signed a bill saying this the specific ban of a strategic Bitcoin reserve or any crypto purchased by the state of Connecticut. And let's say that Connecticut was instead a country, it was France, and France decided, hey, we're going to do the same thing. Then if you're buying a Bitcoin treasury company that has a 10x mNAV, then there's going to be massive compression on that, and you're going to be underwater in your investment. So I think people just need to have nuance on how they evaluate, is this premium worth it over, just the Bitcoin that they hold directly. But like you said, if it's just somebody that's holding Bitcoin on their balance sheet, and not having a 10x, multiple on that, then, it should be accepted because it's driving, new buyers.
Exactly. It's during the internet bubble, the reason these companies exploded in popularity and went to zero was because of false promises and false expectations. But ultimately what these companies are doing is they're buying and holding Bitcoin. And so long as, like you said, they don't have a 30, 40, 50x multiple, 20x multiple, a bet against a Bitcoin treasury company that's reasonably leveraged is a bet against Bitcoin. Because essentially you're saying that the asset that underpins their business and their valuation will go to zero, therein making that company worth zero, right? Obviously there's corporate risk, there's balance sheet risk, there are scandals, there can be lawsuits against these firms. But so long as, these companies are sustainably leveraged, it's kind of a bet against Bitcoin to say that Bitcoin treasury companies will fail or they're a fad.
Yeah. Well, we're going to keep diving in, keep asking the questions, making sure there's no paper Bitcoin out there. Joe, really appreciate the conversation. We'll have to bring you back on, and we'll keep following Horizon and see what you guys roll out.
Absolutely. Fantastic. Yeah, great. Thanks so much for having me on, Jody, and happy to chat about it. Really excited about what the future holds. Ideally, 10, 20, 30, 40 years from now, home prices stay right where they are, and Bitcoin is a much bigger asset. We'll see.